Good morning, it's Saturday morning, and my name is Jessica. I'm here with Beta Virtual Assistants, and we love talking about crypto taxes and crypto investing, what to be safe about, and all that sort of thing. It is Saturday morning, and I have been cruising the internet this morning trying to find out what is going on in the world of crypto that we can talk about. And noticed a couple of interesting things. So there's been a lot of talk about crypto ETFs coming soon. So an ETF is an exchange traded fund. What does an ETF do? It means that if you can have an ETF established and set up, then any brokerage can help their clients buy into crypto. So this is a huge thing that a lot of people really think would be a good thing for the United States. The problem is that the guy Gensler in charge of the Securities Exchange Commission, or the SEC, he has thrown up every roadblock possible to get these ETFs approved, and everyone's kind of mad about it, especially because we're watching other places like Europe and all these things get set up with ETFs, and they're going to be able to really expand the reach of crypto. And meanwhile, United States, they're threatening to make more rules that would make DeFi and all these centralized exchanges require KYC, which defeats the whole purpose of DeFi. We can't get the ETFs approved and all this sort of thing. So it's been an interesting week. And actually, I do believe they've been pushing to get a Bitcoin ETF approved, because if there's an ETF available, more people can buy into it, more people can buy and sell. There's rumored to be a lot of interest and money that could go into this. Then you have to look at how the ETFs make money for their companies. So there's management fees that they get to charge. And so I was reading an article this morning about the Grayscale Bitcoin Trust, which it's almost an ETF, but it's not. And it is the vehicle that I used to invest when I first got into crypto, because I didn't know how to get into it any other way. And that is so true for so many retail investors, that if it's on an exchange or in their brokerage, it's easy to buy, especially if, enough advertising and enough people know about it. But if it's like the crypto thing and you have to open this weird thing and get these passwords and set up these accounts, and it's all confusing, that makes it really hard for people to get into crypto, which is why the crypto market is still pretty small. Even though there was a surge of interest in 2021 when everything was going really well, the surge of interest has really died off since then, because the crypto winter has been going on for so long, to the point that I actually received an email from TaxBit yesterday, which is a crypto tax software that I have tested and evaluated for my customers, and came to the conclusion it wasn't the best software, even though they were claiming that they were the only one that the IRS trusted. Well, okay, what does that say? But they sent out an email yesterday that they are no longer going to be offering their consumer-sided product. They're winding it down at the end of October. So I think that's pretty interesting. And just a sign of the depths of despair that people are going through with the crypto winter. In case you're wondering, we are planning to stick around for the long term. We love helping people figure out their crypto taxes, and that's our thing. And we're really good at it. We're using a software that has been around since 2013 and is not going away anytime soon. I believe it is the oldest crypto tax software there is, and really reliable. If you're interested in finding out more, I will see if I can drop a comment in the links. So it's interesting that the people who saw a way to make a quick buck, oh, look, there's this crypto industry. Oh, look, they need help with crypto taxes. Oh, let's, just jump in there with our software solution and try to claim that it's great. They're now falling out, because I'm sure the business of crypto taxes, especially when it's split among so many players, and there's not that many people involved with crypto to begin with, and there's not that many people who want to report taxes involved with it to begin with, so I'm sure that's part of the reason why it's dropping off. But in any case, I think it's interesting that one of the crypto tax softwares that we reviewed for our course, Crypto Taxes 101, definitely fell by the wayside and is going away. They are trying to get this ETF approved. Ideally, they want it for Bitcoin, but it looks like they have just announced an ETF for Ethereum that might come out first. And I'm not sure if it will be available in all jurisdictions and all that sort of thing. I tried to click on the link and it was broken earlier, but that's the headline. In the meantime, the only way people could sort of invest as a retail investor with a regular brokerage without getting into the whole crypto confusion of wallets and which exchange and all that sort of thing. The only way you could invest was buying into these trust funds that Grayscale was running. So they have the Grayscale Bitcoin Trust, and I think they also have a Grayscale Ethereum Trust. And I actually own a little bit of, I think, the Ethereum one. And I started, my first Bitcoin experience was watching the market go straight up in 2017 and being like, oh, I want to be part of it. I want to get into that. And so I bought into the Grayscale Bitcoin Trust at the end of 2017. And I've looked, it's like about where it peaked. It spent all of 2018 dropping. And I finally got frustrated with it, and it was the end of the tax year. And at the end of the tax year, I like to close out some of my losers to offset my winners and tax harvest losses and all that sort of thing. So I sold out of it. I was so frustrated. I was like, what is this? And on top of that, to finish that story, I actually ended up selling out at the very, very, very bottom. It was the week that the ETF bottomed. Very weak, or that Bitcoin bottomed. But in any case, that was not a successful crypto investing story for me. But I did learn about the Grayscale Bitcoin Trust. And part of the reason why it doesn't, well, it's common knowledge that the Grayscale Bitcoin Trust does not follow the price of Bitcoin. It kind of tries to, and it does own Bitcoin as underlying assets. But because it's a trust fund, number one, people get to decide on the market what they're willing to pay for it, which is not seem to be related to Bitcoin at all. If you hold on to a Bitcoin coin, an actual coin, and it goes up and then it goes down and all this sort of thing, the trust was like trying to follow along, not quite making the peaks, definitely not making the highs. And they charge a management fee. So they're making 2% a year. And actually, I was reading the story. It was saying for its existing product, the Grayscale Bitcoin Trust charges an annual fee of 2%. So if you take the reported 16.2 billion in assets in the Bitcoin Trust and you apply a 2% management fee, it means that Grayscale is generating 324 million a year in management fees from the Bitcoin Trust alone. If you've ever done any research into what to invest in the stock market, ETFs and mutual funds, especially the people that I listen to, which I got a lot of information when I was starting out from Vanguard, and Vanguard said, hey, if you're losing 2% of your investment every year, as compared to this fund over here that's charging 0.5% investment fees, because all of the mutual funds and all of the ETFs and all those things do charge these management fees, that's how the companies who sponsor them make their money. But if you're losing that, the performance of your funds over time is significantly decreased from what they could be if you just bought the individual stocks alone. Which is how I ended up teaching myself how to invest and then buying a whole bunch of stocks so that now I run my own hedge fund, basically, with all kinds of investments, including crypto. Very exclusive hedge fund, only one person invested in it, which would be me. It's interesting because if they do open the market up to exchange traded funds, and they did earlier this year, I think, get a futures exchange trade fund approved. So what does that mean? What is the difference? So right now they're trying to get a spot exchange traded fund approved, which means the actual price of Bitcoin. So you buy Bitcoin and the price that it's going up and down, that is what the ETF would track. The futures exchange traded fund tracks the future contracts. The future contracts can be manipulated and they don't quite follow Bitcoin because, again, it's about trying to see where the market is moving. And so sometimes the futures contracts will be a lot higher than the actual Bitcoin or a lot lower just because people are encouraged or discouraged or whatever. And that means it's kind of ironic, I read somewhere, that they've approved a futures exchange traded fund, but they refuse to approve a spot traded fund because it's too risky. And yet this futures is capable of so much more manipulation and craziness than the spot would be. So yeah, as usual, the United States is making a lot of sense when it's coming to decisions about crypto and investing and everything else it tries to regulate. So that's a little bit about what is coming. So they are trying to get ETFs approved. If they do, everyone is pretty excited that the price of Bitcoin will recover very quickly and probably take off at that point. Possibly. Not financial advice, of course. And who knows what happens between now and then. They were having, I think the ARK funds did apply for something in August. a decision has been delayed until January. Some other funds are supposed to be having their hearings or review or whatever this October month, but who knows what will happen. They might get pushed out too. In any case, so that's one of the big stories that is going on this week. In another story that I saw this week, Gary Gensler of the Securities Exchange Commission was being grilled by Congress, and it did not go very well. There's a lot of stories out there on the internet about how ridiculous he is. Some of the senators accused him of being the Tonya Harding of securities regulations. So Tonya Harding was the figure skater who had her Goonies take a club to Nancy Kerrigan and break her leg so she could win the gold medal at the Olympics. So that happened. It was a long time ago. I remember watching the whole thing back then. One of the few sports I like is figure skating, so I was watching at that point all the stories, and yeah, that was pretty exciting. But anyways, so they've accused Gary Gensler of kneecapping the U.S. capital markets with the avalanche of red tape coming out of your commission. Everybody is saying Europe's getting ahead of us. We need to be moving forward with crypto innovation, and you're just standing in our way. Somebody else said, I wish the Biden administration would say you're fired. There's been an SEC Stabilization Act that's been introduced by Representative Warren Davidson. He says he introduced it because they shouldn't be handling the cryptocurrency affairs in the United States as they are. And so he's trying to help that by introducing the SEC Stabilization Act. I have read about the Stabilization Act, but I forget exactly what it was about. He did say, you're making the case for this bill, the SEC Stabilization Act. Every day you're acting as the chairman, because it's just hit and miss, and everyone's accusing Gensler of doing whatever he thinks he's being paid to do by lobbyists or something like that. That's the accusations. There's this whole discussion about comparing Pokemon trading cards. If you buy a Pokemon trading card, is that a security? And Gensler said no. But then they said, okay, well, if you buy a Pokemon trading card with an NFT attached, is it a security? And Gensler was all over the place. So kind of funny that he's been grilled and it's not going great. At the same time, I do believe on the 27th, so that would have been a couple days ago, Coinbase did organize a little protest. The Coinbase Campaign for Sensible Crypto Policies went to Washington, D.C. to convince lawmakers to provide regulatory clarity for the industry. They passed out cans of coffee that said, wake up, 52 million Americans own crypto. They're making the point that we need to have clarity before all the crypto industries get chased out of the United States. I mean, they've already chased out so many platforms and opportunities for U.S. investors, like the platforms that are paying interest, like Nexo. Nexo's the only one I can think of at the moment that isn't in bankruptcy. But anyways, they pulled out of the United States. They're no longer offering their services. There's also a couple of other exchanges that have pulled out of the United States, and certainly, oh my gosh, it's so frustrating because I go sign into my exchange this week on Gemini and they say, look, we're now offering futures contracts. And I'm like, cool, because I just bought access to this course that's about futures trading and comparing the perpetual future contracts to the regular spot ETF and all this sort of thing. It's very interesting. But I can't do it on any of the exchanges that I have access to as an American. So it's like, okay, well, how can I take advantage of this? And they're on Gemini. They're like, oh, we're introducing futures contracts. And I click on it and they're like, oh, no, not for US customers. And it's like, oh my gosh. So it's really frustrating to be blocked at every corner, not being able to make the investing decisions that I can make because I have educated myself and the US is trying to protect me from myself, which is annoying. That's some of what happened this week. The other thing I was going to mention is I did read an interesting article about DeFi this week, put up by Zenledger, which is another crypto tax software, which does seem to be sticking around for the moment. We still prefer our software coin tracking to it, but they did write a good article about DeFi, how there are proposals to try to make the United States really wants to have DeFi be regulated as much as everybody else. And they're going to try to push for rules that DeFi has to do KYC, which is know your customer. And that's completely against what DeFi is for. DeFi is for just having complete control over your assets in your own wallet. And when you sign up for a DeFi wallet, there is no know your customer because nobody knows that you have that wallet. The only person who knows you have that wallet is you. And there's nowhere on the internet where they can look up your address or phone number or anything else about you. All they can see is what goes into your wallet and what goes out of your wallet, which is public knowledge because it's on the blockchain. So these rules that the United States is proposing to like control DeFi somehow is like frightening, and I can't see it working. Although if it pushes even more people out of DeFi, that would be really sad. On the other hand, there was a article on Cointelegraph from today, 3 hours ago, comparing CeFi to DeFi. So CeFi is centralized cryptocurrency platforms, which is the Coinbase and the Kraken and the Gemini, where there's a company and you send your money into the company. It's not that the company is investing for you, but the company is holding all the assets. And then you say, I want to buy Bitcoin. And so they kind of put Bitcoin in your account, but it's still technically the company's assets. When you want to remove your assets from the centralized exchange and send them somewhere else, then they take some Bitcoin from their supply and they send it to wherever you're sending it to. The problem with centralized exchanges, as we learned with FTX, is that it's kind of a big black box. Like if they're not being clear about what's going on, if they've got funny business going on behind the scenes and you don't know, it's not as safe as having, like they always say, not your keys, not your crypto. So if you have your assets in DeFi, which is decentralized finance, that means you've got a wallet, you sent your Bitcoin to the wallet, you're the only one who has access to that wallet, and the only thing that could happen that's bad is you giving access to your wallet and to a hacker somehow, and the hacker coming in and taking it. But there's none of the risk of what happens if Coinbase goes bankrupt, or what happens if Kraken pulls an FTX and just disappears one day. So in a lot of ways, we always advise our clients, if you're going to hold on to crypto for the long term, if you're not trading it, like if you're running bots and things like that, a lot of those have to be done in centralized exchanges. But if you're not running bots, if you're not doing an active trading strategy where you are trading in and out of assets frequently enough, then you really, to be safer, the safest thing is to send your assets to a DeFi wallet like MetaMask, or even the Ledger and Trezor wallets. So this article that I was reading about, actually I can put this one in the comments because I have it right here. The history of CeFi platforms is fraught with catastrophic failures, from Mt. Gox to more recent examples like FTX and BlockFi, and also Celsius. So it's talking about how CeFi is not terribly safe, and then why DeFi is better for asset management. It has a nice chart about all the things comparing. And one of the things is like you have transparency of transactions because it's on the blockchain, but it doesn't have any know your customer requirements, which would be kind of ridiculous. Of course, I think this is an ad for some Velvet Capital thing. But anyways, we do agree, not necessarily with the Velvet Capital thing, but we do agree with the premise that DeFi tends to be safer than centralized finance, for whatever that's worth. Okay, so I have chatted on for a long time this morning. If you have questions, we love getting questions. What are you doing with your crypto investments? Are you mostly in centralized exchanges, or are you in DeFi? Are you looking forward to Bitcoin ETFs, or would you be interested in that Ethereum ETF if we have access to it? We'd love to hear. So we are here on Tuesdays and Thursdays talking about crypto taxes, usually 4 p.m. Eastern. And we are here Saturday mornings, 10 a.m. talking about strategy and looking at the crypto investment world and things like that. We do have a link in the comments to our most recent course, which is currently free at the moment, Crypto Tax Matrix. It is a use it or lose it course, so if you claim access, you do need to actually go through and use it. Looking forward to another beautiful sunny day here. It's been such a lovely summer and early fall with just beautiful sun around here. So I'm gonna go off and enjoy that. In the meantime, stay safe with your trading. Be safe. If you have questions about, like, if you want to get a second opinion on an investment, we have seen a lot of them. And if you want to message us or come to one of these lives and ask a question, we would be happy to tell you what we know about it and what we've heard and seen. The nice thing about a company like ours, we get to see all of our customers who are in certain protocols, and we get to see that, it's really funny, but all of those protocols are going up. It's almost like a Ponzi scheme. So we have warned a couple of our customers out of certain things before it was too late. Others of them, we didn't get to them in time. But if you're thinking of investing in something, we've probably heard about it. Ask us your questions. And in the meantime, have a great weekend. We'll see you again another time, and so long.